government shutdown. We got the loss of food stamps, EBT. Then you have paychecks being missed, delayed, not getting paid at all.
It's true.
Guys, something is coming, and I need to make sure you're prepared. Check this out.
I'm not going to lie. Yesterday, last night, I felt completely defeated. Just because they're so open about what's happening, and it's happening at such a fast rate. I've been trying to warn you for a long time now. You don't want to listen. I'm telling you right now, you better prepare your family and your circle for what's coming. Don't comply. They're going to be coming to everyone's doorstep. You're not going to be able to hide from this. You're not going to be able to move from this. It's going to hit every single corner of this earth. I hope you're all having a good day. Please take care of yourselves.
It's about to get real. Now, I don't know what preparedness means to some of you, but baby, you better go ahead and get prepared. And if you're waiting for the news to tell you, oh, well, you need to run out, you need to get this, it's too late.
Hi, I don't know what you've been doing. If you've been collecting supplies, water, extra container of Band-Aids, Neosporin, or you have upped it to maybe even getting a backup power generator. But if I were you, I would get into high gear. Things are not good right now. They're going to get worse. And you need to have something to fall back on. If you listen to no other videos that I've made, listen to this one.
I don't know if everybody is paying attention, but times are getting really hard. I've had a lot of friends that had good jobs for years, being laid off. I've had people hit me up and asking to use me as recommendations and referrals and seeing if I could put them on things. And I'm just paying attention to the climate out here, and it's getting pretty rocky. I've also had numerous friends tell me how hard it is to get a job right now. It's a lot of interviews. People are going through the interview process and going to 2, 3, 4 rounds of interviewing and still not getting called back. I know people that's putting in 30, 40 applications a day, and they've been doing that for over 30 days. Still not getting anything substantial called back. So I'm like, I don't know if everybody's aware of how bad things are and how bad things are going to get. We're also like on the verge of going to war. There's countries in war right now. And I think because of so much distractions in the media and in like social media and entertainment and people keeping up with all this bullshit online, people are really numb to what's going on outside. But I say all that to say, a storm is coming, and some people have already felt it, but it's nothing like what it's going to feel like when it really hits. All y'all that's buying jewelry, getting new cars, just adding to y'all motherfucking expenses and y'all workload and y'all overhead. I really hope you've taken in consideration that what you're making now might not be what you'll be making in a few months to a year. So you might need to recalculate some of these things before you keep taking on new burdens. Yeah, good luck.
Number of preppers in this country has more than doubled. We'll find an empty bag in your house. Any kind of bag, preferably a backpack. If you don't have an extra backpack, find a reusable bag. Tens of millions of people now identify as preppers, and now is a really stupid time to start calling these people.
Okay, sounds pretty bad, right? Well,
so far,
don't worry,
has earnings in less than a week,
because
and this could be huge. So
Tesla has earnings. So let's jump into a little breakdown on recent earnings and if this is worth paying attention to right now. Spoiler, I think it is. I can see comments over on YouTube. So that'll work. But right now, let's talk about Tesla. And when is this shareholder vote? I know it's soon. When is the vote? Thursday, November 6th. Okay. When is NVIDIA earnings? November 19th. Okay. Cool. See you on YouTube in the chat when we get back from this breakdown. And should be able to see this this last chance, right? It says last chance on YouTube. Yeah. Okay, cool. There's one stock that is about to skyrocket. It is a stock that just had earnings. The earnings were good. The revenue beat overall. Took a bit for that reaction to turn out good. The stock is Tesla. Elon Musk's $1 trillion pay package. Vote is November 6th. NVIDIA earnings are the week after that vote. And between now and that vote, Tesla looks like it's ready to skyrocket. It's coming out of a big base. It's above that satirical, but also very real based on how buyers and sellers are treating it, $420 level. And near the middle end of this week, earnings from the Mag 7, including Amazon, Apple, Meta, and Google, are going to be out. So I think Tesla is ready to go. This is not financial advice, but looks pretty good.
This is Sam Putnam.
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 So this is the chart. This is what I'm talking about, $420. It's up above that very important $450 level, which it didn't break since the middle of September. All of the market did awesome in September. Since then, we've been dealing with the Trump Xi Jinping, gonna get that pronunciation one day, conflict, right? That was this bad day 2 Fridays ago. Rare earth stocks skyrocketed. Speculation money was in full bore. Quantums had just started to come down. And now it looks like, for the most part, these speculation stocks are down and the actual market is taking over. So SPY's above that level. We're back to all-time highs. Took just over a week. Really, you could say 2 weeks. So it looks nothing like a year ago because we've reclaimed that massive down day. This is a big down day for this buy. This is 3% for the market as a whole. Well, if you measure it from top to bottom, it might even be 4%, right? It's rough. And it's very similar to this DeepSeek day back in December of 2024, when the Chinese AI model came out that cut NVIDIA's market cap by, oh, God knows, 100 billion or something like that. Right now, Tesla just had earnings. The reaction was poor at first. They did miss on earnings per share, so they missed earnings. They did have higher revenue, and they bounced right back up. So a couple days ago, this is getting pretty nitty-gritty, but it pretty much tells the story when you're trying to get situated in the stock. Tesla sold off when the market was strong. This is on the 24th. So that's Friday. This little day is Sunday futures. It sold off when the market was strong on Friday. So here's the strong day on Friday. You can see most of the market, of course, NVIDIA, big day up on that day. AMD, big day up on that day. Tesla, not so much. Sold off. But big day today on Monday. Of course, the SPY doing well as well. And now it looks like Tesla's going to get over that 450 level into some blue skies. So could it take a week? Could it take a month? Don't know. But here is that next breakout, 488. And if we look on a 5-year chart, of course, a 20-year chart, this is a parabolic move ever since that move on the Trump election euphoria when Tesla took off. When everyone thought Tesla donating a bunch to Trump, Elon donating a bunch would help Tesla. Of course, they gave back most of that move once everyone came to their senses and saw how euphoric that was. And since then, Tesla and Trump had their breakup. Tesla went sideways and had this breakout around the 350 level. And here we are consolidating again. So that's the story. Upcoming dates that are important. That shareholder meeting. And then NVIDIA earnings is sort of the last earnings release. So see how Tesla moves into this vote. This is November 6th, so today is the 27th. This is just over a week, 10 days away. So a lot of time coming into this vote. Now, with all of that technical info out of the way, of course, Cathie Wood is screaming, about the pay package in a good way, saying it's going to pass for sure. The concern is these massive passive index funds that everyone's 401k is invested in QQQ. If you're not invested, you are invested just as a result of being in an index fund, which tracks the Mag 7, which is led by AI, which is tied to Tesla. Tesla is in that Mag 7. So Tesla also in ARK, of course, Cathie Wood's ETF. So of course she's going to say this pay package is going to pass decisively, despite those proxy voters of the passive index funds. Who knows how that's going to evolve in the future, if these firms are going to continue to be able to vote their shares when the shares are actually owned by tens of millions of people. just passing on that vote to the proxy owners. But it doesn't really matter whether that pay deal passes or not, in my opinion. The big deal is basically, is it going to hold up over this 450 level? Because if we look at some other earnings, it's been good. GM, it's incredible, but some of these companies that were sort of left for dead, GM, rebranding themselves as an electric vehicle company, their earnings reaction has been great. This CRS, Carpenter, they do steel coating technology. They have Alcoa as a big customer, a big steel company, refinery. This earnings reaction is great. So consumer is not doing so well. Netflix earnings reaction was poor. But all in all, earnings reaction has been good in Q3, which is very different from Q2. Q2 earnings reactions were not good. So, of course, if that pay package passes, that will be bullish for Tesla, or maybe priced in, but definitely not a negative, obviously. Elon, maybe threatening, maybe not, that he will leave if the package is not passed. Definitely telling shareholders to vote. Either way, I think the stock is in a pretty good position, and that earnings was good. I mean, revenue did increase by more than 10% year over year. Yes, they didn't beat on earnings per share, but they only missed by, what is this, like 5% ish? A little more than 5%. And then the delivery numbers, it's great to get into all the delivery numbers. And this is a large number, but we have to also remember when delivery numbers were released. This is October 2nd. This was a sell the news event. So even though the numbers were good, the stock sold off, and it sold off significantly over the next week, which is not so surprising given that it was up 30% in late September. So that's Tesla. Those are the recent events and the upcoming events. The shareholder vote on November 6th. And now you just have to decide, if you're watching Tesla, do you get in now? I think getting in now is preferred, because you don't know if the market's going to keep going up. Everyone's betting against it, and of course, it just keeps going up. So that 450 level is important, and listening, paying attention to when that shareholder vote does come out on the 6th, that's moderately important, in my opinion. So if you like these videos, hit that like button. If you want to see more, hit that subscribe. And if you head over to stockscommunity.com, or brand new, you can also click that join button right here on YouTube. Take advantage of our make $1,000 in stocks in 90 days guarantee, or your money back. I'll see you in the next one, and good luck.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, everyone, let's tune back into a little bit of Chris Sane.
Naysayer.
Okay, guys, I can't stress it enough, man. How you do anything is how you do everything. If you give them the power to feed you, you give them the power to starve you as well. Yes, you're learning a skill over here that can help kind of insulate you from some of this. But at the same time, there's still no denying that on a larger level, some crazy things are happening while we're going and living through crazy times. And so whether you got a stack some money, stack some food, prepare for a rainy day. I always say, man, the storm gonna come. Our job is to make sure we know how to dance in the rain. You got to make sure you got a good umbrella, man, and that just means thinking ahead, making provisions, not having to be reactive, but doing things preventative on the front end to make sure that you are prepared, protected, and ready for whatever may come. No, we can't pinpoint with absolute certainty what will come. You just know you've been here long enough, that eerie feeling like something is brewing, something is at play, and soon it will reveal itself. No matter what, guys, God is still in control. There's nothing we can do about anything but prepare the best that we can. Be flexible and nimble, the same way we are in the stock market, the same way we are with our trades. Okay, so Coach just wanted to put that on you guys. Hopefully this was helpful. Share this, but also more importantly, let me know your thoughts about the state of the world, the state of the economy, and what you are personally feeling at this point in time. Man, listen, we make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result, but if you consider the journey, do me a favor. Don't forget, like, subscribe to the channel. Make sure you guys grab some freestyles using my link below, and I'll catch you guys in the next one. Peace.
All right, everybody, let's take a look at some Intel news. There definitely was a chip announced today. I know that, so I don't know what ChatGPT is talking about here. Pretty sure Broadcom released a chip. Let's see. I'll just show you what I'm looking at over here. Was it not Broadcom? Was it ARM? Could have been ARM. Let's take a look. ARM. I don't know. I literally was just looking at this. This was the semi news was really good. Really good source. No, what was it? What was it? Semi news? I think. Let's see. Semi news. Chip? I don't know. Really, the best way to find the news is just to go on Thinkorswim anyway, and then look at all the press releases, because they're pretty up to date. So, AVGo, ARM, what is going on here? Was there not a big chip release today? Anyway, we're talking about Intel, so it doesn't really matter. There we go. Get rid of that news. There's the spike. Would be great to pull up recent earnings as well. Recent Intel news, recent Intel earnings, companies reporting in Q3. Okay, let's do that. That should be pretty helpful. TMUS. I wouldn't have thought to look at T-Mobile. Pretty ugly. Ugh. Jeez. Alright. Here we go. Recent Intel news. Right here. Alright. And over here, who is it that had that really good semiconductor analysis? Someone I just saw. Might have been a ways back here. Well, I guess we will let it rest. No need to get in the weeds, I guess. There's the government stake. Then news, OpenAI deal, government stake. Compare chips and recent chip news. We're just gonna outsource this to ChatGPT instead of the semiconductor news handle. Pretty sure it was called the semiconductor news. Something like that, semi-analysis on Twitter, on X. Okay. So, notably, OpenAI has not done a deal. So OpenAI has not done a deal with Intel. Yeah. It's hard to, they've done so many deals with all these semi companies. It's incredible. Broadcom, AMD, Walmart, Nvidia. Okay. Jump into a little breakdown here. I can see comments over on YouTube. Otherwise, we will get going here. This is the ETF SMH. AMAT also in that basket. Okay. Here goes. Whoops. A little bit of a sticky mouse there. Alrighty. Now this should work. There's one stock that is about to break out, in my opinion. It is a chip stock. They recently had earnings. The earnings reaction is relatively good. The stock is turning up, and the government also took a 10% stake in this company. This is Intel. They did that through the CHIPS Act. Notably, Intel is the one big semiconductor stock that OpenAI has not done a partnership with, not done a deal with. OpenAI has collaborated, done a deal to the tune of multi-billions, tens of billions of dollars with AMD now, with Broadcom, even with Walmart. So, of course, NVIDIA investing in OpenAI as well. You could say, why have they not done a deal with Intel? Well, I think even without an OpenAI pop, and given that the Broadcom stock pop was minimal on that OpenAI deal news. The OpenAI Midas touch might not be here forever, right? Intel looks like it's positioned well after recent earnings. The Mag 7 earnings are later in this week. If those go well, relatively well, Intel's in a great spot, and it's in a good buy spot. So it's not financial advice, but let's jump into what they've been up to.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is the chart. So here's the earnings. You can see that pop on a pretty significant beat on earnings per share. Gave it mostly back the next day, which is notable given that the market was very green on that day. That was Friday that Intel gave it back and the market went up. And now we're still above where we were before earnings. So it's good. But it's intriguing because it's not like buying, NVIDIA. It's hard to buy NVIDIA here after 4 green days, right? Even if you're very bullish and you see all-time highs as on the horizon. If you look at Intel, we don't have 4 green days in a row. We just have this little compressed day and then this bigger day. So after this big base. And this is a pretty safe base to play off of, given there's no major news that's likely to disrupt Intel. They're a chip manufacturer. We always be aware that Trump could say the T word and we could have a big move down, but we're well above that tariff scare, the most recent tariff scare, back into all-time highs. And as we can see, their earnings reaction, relatively positive. Was it an IBM type reaction? No. IBM selling off immediately on earnings, bouncing back, and then having a massive rebound. Was it a GM reaction, which is even better? No. GM having a positive reaction and then continuing on along with CRS, but it definitely was not a Netflix type reaction. And in just a few days, we're going to see Amazon on Thursday, Apple on Thursday, Meta on Wednesday, Google on Wednesday, and Tesla just releasing earnings and having a reaction that is kind of in between that of IBM and that of Intel. Okay, an okay reaction. Did have higher revenue and now getting over a key level. So it's interesting when these stocks don't have huge reactions, because what it means is you actually get a chance to get in. It is great to have a perfect reaction like GM where you get it a couple of days to go sideways, but oftentimes what happens is when there's an awesome reaction, the stock just keeps going up a couple of days in a row. So if you don't see this on the right day, you're kind of cooked. That is not the case for Intel. Also not the case for Tesla, where you're getting a second chance to get positions. So that's the chart. That's where the buyers and sellers, that's where the supply and demand is. And then as for the earnings, revenue did increase 3% year over year. So it's something. And then also net income positive compared to 17 billion loss year over year for Q3. So that's good as well. They also have this guidance, which is good for Q4. And that's good for revenue as well as guiding well for their earnings per share. So this 10% stake from the government, from the CHIPS Act, led to this move. This has been a massive move. initially just 30% and then really turned into a 60% move at this point, double that initial move off the headline. So definitely very bullish. The other company that comes to mind that had a big government investment is MP Materials. That $400 million investment from the Department of Energy pushed this stock up 100%, plus. Now, it's not completely fair to compare this to Intel because MP Materials is a new company and Intel has been around forever, but it was a change of character move for Intel, that piece of news. Huge volume, and once it gets over $50 a share, there's another level, and it's starting to look like this company could get back in the pack with its other semi names. This is the semiconductor ETF, which has just skyrocketed, led by NVIDIA. So, Intel is definitely interesting. Long term, I think it's much safer to look at it just right here off of this level, right after this earnings. Never want to buy before earnings. It's at a great spot. Earnings already happened. It is kind of extended from this line. This is the 200-day moving average. If you look at its peers, like AMD, this is what, 80% up? It's pretty extended. And NVIDIA up 30%, not so extended. And then the smaller companies, LRCX, 60%, AMAT, 20%, 30%. So Intel definitely on the higher end of being kind of overbought, at least if you're just looking at this one line. Now, the benefit of us actually looking at what this company has been up to, us looking at the earnings, us knowing and looking at this 10% government stake, is we can take all that information and we can say, yes, it is up a lot from this line, but we're not a computer algorithm, right? We know earnings just came out and the reaction was good. We know about this government stake. We know the reaction has been good from that. And so we can feel better about buying in at a price level, which is otherwise, if you just looked at the distance from this line, kind of overbought. So that's the balance that being fundamental gives. Of course, if you adjust your fundamental, I don't know that you would be looking at Intel at all because why would you want to invest in the laggard of the semi stocks? The one stock that OpenAI did not do a deal with. What does that say? Well, they do, obviously, they're always working on their chips. They do have a new chip called the Panther Lake chip, has higher performance and density, which is another way to say power efficiency, which is basically the buzzword of the year. Every single chip company is jockeying to be power efficient and to not use so much energy because if you need the equivalent of whatever it is, 20 nuclear power plants to provide enough computing power to make up for all of the demand from these LLM companies like ChatGPT, like Anthropic, well, maybe that's not super realistic to build all those power plants out and to get paid when those haven't even been built out. So better chip architectures are very, very sought after. So sure, OpenAI didn't do a partnership with Intel, but if we look at the other companies that OpenAI did do a partnership with, yes, there was a big move up for AMD. Even on NVIDIA, when they did that investment, there was a little move up. I don't remember exactly where that was, but maybe in here. Even by me just saying I don't remember and I can't tell on the chart, it kind of gives away how it wasn't a game-changing move for NVIDIA. Of course, NVIDIA was paying them, investing in them. AVGO, the bounce was here, and that gave it back. And then Walmart was a big move up, but it's Walmart, right? It probably hasn't had a lot of other game-changing tech innovations. No shade on Walmart Labs, but started to give that back too. So Intel looks great, doesn't have that open AI connection, does have the government connection, which investors seem to love, makes sense, and pretty good reaction after earnings. So if you like these ideas, hit that like button. If you haven't hit that subscribe, hit that subscribe. And if you want to see the guarantee that I can offer, it's on stockscommunity.com. And if you have $25,000 to invest, and we can offer you, if you don't make $1,000 in stocks in 90 days, you get your money back. And you might say, that seems far-fetched. It's not far-fetched to make just over 1% a month. Of course, you get your money back if you don't get to that 1%. So head over there, see if that's worth it for you. And if not, I will see you back here on YouTube.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So let's jump back to some Chris Sane here.
This video is sponsored by Moomoo. Are you ready for the 100K challenge? If so, download the Moomoo app. This year, I'm going to help individuals, like I do every year, go from 0 to 100K. But the difference is we are going to be using the Moomoo app, more importantly, the paper trading feature, to teach those along the way that want to learn how to properly invest and build wealth in the market. Let me show you what it looked like. Okay, guys, download your Moomoo app, get your free stock, take advantage of the cash account. Once you get inside here, you're going to be faced with a plethora of tools that can change your life, okay? But to start off, I want to show you guys the paper trading app. Check this out. You start out with your today's P&L, okay? You can trade these net assets so that you can see, if given a budget, how well you can do while you expedite your learning curve, okay? Check this out. You have some of the stocks that they already have on their heat list. Number 1 being NVIDIA. Number 2 being Tesla, 3 being AMD, 4 being Broadcom, 5 being MP Materials. You even have some of the weekly top traders so that you're part of a community while you are on the journey learning how to invest and build wealth. I love the forum because you guys can encourage each other. You guys can talk about the hot plays and what is going on. But more importantly, you can do all this without putting your hard-earned capital at risk. And you can learn the skills you need to learn so that you can trade properly on the 100K challenge. I also love this news feature. News runs the market, and you got the latest headlines about the market and things that you need to know that is relevant and that is on time. Guys, information is how the market makes its decisions. You want to know as much as you can so you can make informed decisions on the trades and investments you make. Guys, download the Moomoo app. The link will be in the description of this video and in the pinned comment below. Do not miss the 0 to 100K challenge this year, but also learn to invest, learn to trade, but ultimately learn to change your life. I want to thank Moomoo for sponsoring this video. Let's get to it. Okay, guys, class is in session. Today, I'm going to teach you the power of VWAP. Our word of the day, our lesson of the day is VWAP. Everybody write this down. V, volume weighted average price. This is an indicator that if you're not currently using, I want you to include it on your journey. I'm going to teach you and show you how to use it today. Class will be in session. so that you can make money. Really quickly before I dive into it, you ever hear me say you want to wait for a pullback, or in the morning the market will fall to test support and then bounce and go up the rest of the afternoon? You ever hear me say that or send signals like that in Discord, for example? I'm about to show you how it plays out. I'm going to teach you guys Tesla today, but this is universal, so you can use it on any stock that you trade when you see this setup, okay? Today was 100K play in a day. I want to show you how it's done in real time. Let's get it. Okay, guys, we jumping in here. I got to make sure we know what time it is. I want you guys to take your eyes.
Let's focus on some ARM news. We got plenty of charts to look at. Like Chris saying, but do want to look at charts for ARM. So ARM almost got acquired by NVIDIA. Pretty incredible. NVIDIA also an investor in this company. So here we go. This is the chart. This is a 5-year chart. This is a weekly chart. Pretty interesting. That earnings is on the 10th of November. NVIDIA earnings is on November 24th. I can see comments on YouTube. Otherwise, we're going to jump into a little breakdown here. There's one stock that is about to explode in a good way. This company almost got acquired by NVIDIA for $40 billion in 2020. NVIDIA remained an investor and has recently lowered its stake, but is still significantly invested. This ticker is ARM, ARM. The company makes chips, of course, and earnings are coming up on November 4th. So I think now is the time to take a look at ARM. I think it's a good time to buy, in my opinion, and it's very near all-time highs. Let's jump in. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is the chart, and you can see this double top here from just a week ago, and earnings coming up on the 4th. Of course, the last 4 days in the market have been green days, so no surprise, ARM is also green. But if we look back on the 10th, this is the big down day, 4% down day in the market from Trump and Xi, talking about tariffs and rare earths. We've since reached all-time highs, as has ARM. Now, if we look at a 5-year chart, this is where it gets interesting, because we're getting very near all-time highs for this company. Of course, 20-year chart doesn't look much different. So here's the deal. This is the past year of trading history that we have for ARM. It's not a lot. But what we can say is that it's basically chopped around sideways. If we just look from tariff lows, yeah, we're up a lot, but every company is up a lot. over that period of time. So why now? Well, it has to be the market's at all-time highs. It has to be this level going back to July and then early 2025 that it's right up against, and it has to be this earnings. So is it smarter to wait until after earnings to buy this? It is, okay, but if you do get in here and you get a pop, well, then you do have some cushion to hold into earnings. So it's less so betting on earnings. It's more so just sort of weathering the storm of whatever earnings may be. Of course, earnings might shoot the company, the stock much higher. This is what we have so far. We've seen Intel earnings, NVIDIA with an investment in Intel as well. This is the Intel reaction, which compared to Q2, great. You know, a lot of Q2 reactions were poor. And you might say, well, okay, it's not like they're all related. It's like, well, I don't know. You tell me. Netflix Q2 earnings was not good. Spotify Q2 earnings was not good. Really, the only Q2 earnings that were good were Meta and then, you know, Reddit, which is not at all related to semiconductors. This is the semi ETF. It's basically followed the market. It's been great. Of course, that makes sense when Mag 7 is 40%, 30% of the market, and semis, you know, including NVIDIA. NVIDIA's in the Mag 7. You could buy NVIDIA here, but why are you looking at NVIDIA when on a 5-year chart? Yes, we're breaking out at all-time highs, but we also just went on what is a pretty massive run, not just from April, but really from, you know, 2 years ago. So it starts to beg the question, are there going to be some stocks catching up that haven't experienced that same growth over the past year? Really, that's all we have for chart history for ARM. So I think this one is pretty interesting. If you do use a weekly chart, you can see that. So that acquisition was a good sign. I mean, it has to be a good sign when NVIDIA wants to acquire you. SoftBank owned ARM. So ARM was private, and acquisition didn't go through. I don't think that's necessarily about ARM. I think that's more about, well, who knows exactly. Maybe they'll give us a hint here, but could be something to do with antitrust. It could be something to do with something to do with SoftBank and their mandates. It's hard to know exactly what it was, but what we do know is that SoftBank invested in them, Masa invested in them. Now they're public to trade, and NVIDIA still owns over $50 million of ARM. They previously owned $150 million. They reduced that stake and did announce that $5 billion investment in Intel. So, with all that said, why ARM over Intel? That's not an easy decision, an easy comparison to make. Intel has the government stake. Intel, as I just mentioned, has that NVIDIA investment, which is a lot bigger than NVIDIA's investment in ARM. But when you take all that into account, ARM is still a major competitor. Very good power efficiency for their chips, which is increasingly important as power becomes the bottleneck for AI. ARM licenses their architecture, so it's more of a picks and shovels than Intel or AMD. Obviously, NVIDIA has that vertical integration, and that's what allows them to have such high profit margins. Some people say as high as 70 or 80%, but licensing your architecture means you might be able to double dip. You might be able to license it to multiple of these companies. Obviously, AI is the vertical that you want to be the most entrenched in. I don't think they necessarily have a huge advantage of, maybe they do over Intel, but I think AMD is pretty heavy into AI, GPU type, whatever the next tensor processing unit, the Google chip, basically, machine learning optimized chips. ARM is definitely in the mix and probably doing a little better than Intel. So I couldn't tell you exactly, if I only had to invest in one, which one I would invest in. The throwaway answer is that you would just buy NVIDIA, but I don't think right now that's really that smart a move when, NVIDIA had this base, but it failed this breakout and it still has earnings to go. It's going to be the last earnings of the season. So it seems safer to have that earnings come out. And then if that earnings reaction is good, something like a GM earnings reaction, which I'm not saying it's going to be, but if it is, that gives you a super low risk opportunity where you can get in and then you can risk a big earnings candle like that. So if there's a ton of volume on a 1 day earnings move, then that means there's a lot of buyers here. And if they're all making money, if the price is above that candle's close, then you're basically riding the wave of buyers. So that's why you might not want to invest in a company like NVIDIA right now when it just went up 4 days in a row. Of course, the market did too. But that's why a company like ARM, which did it go up 4 days in a row? It did. But, it also has that all-time high breakout. So you have to kind of do your own diligence, manage your own risk is really what you have to do as to whether you're going to get in before earnings or after. But in general, you can't write this company off even though it's chopped sideways for so long, for the reason that it's at all-time highs. And it is in the mix. They're partnering with Meta for AI, of course. This PyTorch, even though it's open source, it is no joke. This is possibly the most important open source library of the past 5 years. A developer might debate that with me, but as far as AI libraries, this is extremely important and extremely valuable, even though it's basically given away. The model is to give away, your libraries when you're ahead in the game. And Meta is investing $1 billion plus in a new data center in Texas. And it seems like ARM is going to be involved in that. So, of course, there's going to be litigation challenges. All of these companies have tons of these type of cases going on at all times. The licensing, as far as ARM being an architecture provider, is I can't imagine that's ever going to not be a risk factor for this company. But at the end of the day, SoftBank owned them. SoftBank chose to invest in them. And Moss is no dummy. And now they're publicly traded and they're at a great spot over it's really a 3-year chart. I mean, on a weekly chart, they're breaking out to all-time highs. So that's the idea. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you're trying to make $1,000 in stocks in the next 90 days, that is our guarantee to you. You do have to have $25,000, but you do get your money back if you do not hit that goal. Plus, you get 4 years of investing education and up to a decade of engineering education on AI and some of the leading companies in the market through basically this channel and our Discord. So check it out if you think that's worth it. I'll see you in the next one. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's take a look at a little bit more. Chris Sane here.
To this line right here, okay? That white line, I'm gonna come back to it in a second, is called VWAP, VWAP, okay? Now, I'm gonna draw this out because I want you to see this was a gap down, but assume this wasn't a gap down off of earnings. So this is an earnings gap down, okay? They left this big old gap right here. The gap was started right there and began right there. That was the gap, okay? Well, coach always say, wait the first 30 minutes and stuff like that. Let the market fall, let it crash. So Tesla came from here, came all the way down here, okay? You can look at this as one big candle if you wanted to, just so you guys can see the full picture of what this would look like, okay? But I want you guys to see what it actually did, okay? And I want to play this out for you so that you can take advantage of this. It fell down, so it went down. It bounced up and hit this resistance, okay? Then it came down and hit VWAP, okay? VWAP equals support. When you see this, this is the 5-minute time frame. Write this down or make sure you see this. 15-minute, 5-minute, 30-minute, 1 hour. These are all the time frames this works for, okay? So you use this to your advantage when you see this. Let stuff fall down, then let it pop up, and then come back down to retest. So we got, boom, it hit here. This VWAP is also your entry once it retests this line right here, okay? And then look at this. This play was $160,000 in a day for those of you that know how to trade and play this. But just this candle alone was 50K. This is how powerful this is when you learn this, okay? Let me clean this up. You guys know Coach keep a clean chart. I want you to see this, okay? I want you to see this and how it rolled VWAP all day. Another clue, whenever you see VWAP slanted like this, the stock is going to go up. In other areas, if VWAP is coming down like this, the stock will go down, okay? So you can use these little clues to your advantage, all right? Watch this twice if you need to. Do not miss this $1 million worth of game I'm giving you, okay? But check this out. On top of VWAP slanting up, so it came down, gap down, boom, okay? Then it popped up. Let's play this out. Boom, it bounced off of here. Then it went up. It tested here to 48, bounced through here, breaking through all the stuff. Then it got here, but then it came back. Now, this is support. This purple line right here, I mean, I don't know if you guys see that. That became support. So you got support 1 here, support 2 here. Look at this. It rolled this all the way up. 3 green soldiers, everything. Got all the way up here, pulled back, came up, pulled back. Now, look at this. Support number 3, we're going to just say S3, became support, and then boom. Okay? So now what we have, guys, is potential for continuation for tomorrow. But this is resistance up here. All right? This is resistance. And so we must break this or gap above this, but we have CPI on tomorrow. Okay, so listen, man, Coach wanted to kind of show you and illustrate for you how you can be patient when the market first open. If the market is down, let it fall, let it go down, let it crash, let it hit support. Then you wait. Typically, if you wait to 30 minutes, you're going to get the bounce. So you can buy it like 10 o'clock Eastern time. So match that up to whatever time your time is, okay? And then what happens from there, guys, is you are able to then ride the play up, okay? So then it's going to go to various levels. It might go to the resistance number 1, resistance number 2. Today, it closed the gap that it made from yesterday. So Tesla was up here, for example. It crashed due to earnings. So it left this big gap. Look at this big gap between my head. The top of my head was resistance. The bottom of my head was support. It fell way down here, okay? But today, it came all the way back up to close the gap. Boom. Before the day ended, okay? Guys, these are $1 million worth of game that I want to teach you and show you. I always say, don't ever get too down about your losses, because one right play, one right look and scope of the market can change your trajectory. It could have you doing extremely well in terms of the moves you're making, okay? And so I just wanted to make sure you understand that and see that, okay? But listen, before we get up out of here, I need everybody to be in a Discord first thing in the morning, okay? I'm going to also be sending you guys some information on 2 things. One is this upcoming event I'm having for the Patreon members only and Discord members only. And then 2, I need to start getting you guys ready for the 100K challenge for 2026. And there I'm going to have a few different things that you guys are going to enjoy. Everything from paper trading for those that need to get your feet wet, but you don't want to lose money yet, okay? Because there's losses that come with this game, and I need to protect those and help you protect those as much as you can. So you might take part in the paper trading part of the 100K challenge, so that say January you paper trade, and then February you join the actual trade, so that you can take
Los envíos de Mercado Libre llegan en menos de 48 horas. ¿Cómo se logró esto?
And then boom, apply what you
Sorry about that. Just
to our actual trades that we're gonna get busy
looking
with,
up some info about
and then we
this
will
Argentinian
have,
stock.
the actual trade. I'm thinking about throwing some type of health and wellness challenge in there as well, okay? Coach got a lot of things I'm thinking about. I've been busy just trying to get my thoughts centered so that I can make sure we're on the right path, okay? So if you guys got some suggestions, let me know. I was thinking of a 30-day juice challenge or a juice cleanse in addition to the 100K challenge, okay? I was thinking of something like that. Let me know what you guys got in mind, okay? And then that's in addition to the paper trading. So you got the paper trading, you got the regular trading, and then you got the health and wellness challenge. Might be a juice challenge, okay? I'll teach you guys how to detox and cleanse and make sure that we are prioritizing our health on this journey too. I want you guys to be spiritually on point, physically on point, emotionally on point, and of course financially on point, okay? So listen, man, those are just a few things Coach had for you today. Use that lesson. Listen to this. On any stock you see, that's called the VWAP. That's an indicator. It's called the volume weighted average price, okay? If you can use that, it's a game changer, okay? It'll sometimes be support. It'll sometimes be resistance. It'll tell you when the sudden change. So like you always hear me say, get on the right side of a trade. You will know the side of the trade you need to be on based on what the VWAP is doing, okay? If a stock falls below it, boom, it's time to start going down. If a stock pops above it, it's time to start going up. You have different things like that, man. But listen, Coach just wanted to get back in the bag for you guys. We're going to end the week with a bang. So everybody be in the Discord first thing in the morning. We're going to crush the SPY as well as Tesla, either one you choose to play. Listen, we make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result. But if you consider the journey, do me a favor. Don't forget, subscribe to the channel. Make sure you guys grab some free stocks. Use my link below. And I'll catch you guys in the next one. Peace.
All right, let's jump into a little breakdown here on Mercado Libre. Boy, oh boy, is ChatGPT getting busy here. A lot of processing going on here. There we go. Private bank is BMA. That's right here. YPF is Argentina's largest energy company. And then Mercado Libre is the Amazon of Argentina. Pretty exciting. Argentina hasn't done so hot, but that could change, at least stock market wise. The Argentine peso appreciated 10%. Okay. If you have any questions, drop those in the YouTube chat comments. I'm going to jump into a little breakdown right here. There's one stock that is about to break out. It is an Argentinian stock. Argentina, Javier Milei just won the midterm elections, and the stock market really likes that. So the Argentine peso has appreciated 10% as compared to the US dollar. Argentinian bonds are up. And most importantly, for us as stock investors, equity investors, there are companies such as this one. The ticker is MELI, Mercado Libre, the Amazon of Argentina, that are well positioned to benefit from this national boom in the economy, the increased GDP, and the e-commerce wave, which is reaching its way around every corner of the globe. In this midterm decisive victory, it helps these stocks go up. It's not financial advice. Let's take a look.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is the company MELI, Latin America's leading e-commerce and fintech company. And this is the chart right here. You can see that gap up right here. So pretty significant. And if we look on a 5-year chart, you can see how close we are to all-time highs just from a month ago. So what this is a massive growth in e-commerce, massive recovery for an economy, Argentina, and without even knowing anything about politics, you can say these companies, this market definitely likes that midterm election victory. So we can see that in Meli, we can see that in other Argentina companies, YPF, and then also this Argentinian bank, BMA. Big move up, ton of volume as well. So you could say, why not buy this one? Well, I don't think you want to jump in on a gap up that high, personally. I don't think you want to jump in on a gap up like that on YPF. So why Melly? Well, not only has it been channeling up, which I don't love channels in general, but I mean, this is over a 5-year period. So it's pretty much gone sideways, down a little bit over the past year. And this could be a change in character for this company for sure. It does have earnings in just a couple of days. So maybe you just want to wait, almost certainly want to wait for those to come out. But this is definitely good to have on your radar. And the volume's not as significant right here. But again, as we just saw for YPF or BMA, that's significant volume. That's significant volume. So this is definitely a massive piece of news, this midterm election for the market. And we do remember what that can do to sort of stocks that are somewhat politically implicated. We saw the Tesla move after Trump's election is 80% up, which was absolutely crazy. So you have to consider Melly. It's a way to diversify, you could say, to get a piece of an emerging market that is somewhat safe to invest in. It's listed on the NASDAQ. And as far as what this company does, they are the Amazon of, well, Latin America. They are growing almost 40% year-over-year revenue increase. And they have substantial growth in the massive markets, Brazil, as well as Argentina, Mexico. They also are expanding into logistics, which is, you can imagine how important it is to catch up to Amazon in terms of last mile delivery, or really, I mean, I haven't been to Argentina, but pretty much any delivery that is fast at all is probably pretty helpful for this company. This is the other company to watch, YPF, Argentina's largest energy company, also having that gap up. So if they're doing well, then I think you can see that in Melly as well. Melly, of course, we just looked at the chart and we saw that Melly's been channeling up over the last 5 years, whereas YPF has been a little more euphoric, so a little more resembling sort of stocks, that we have here in the US. So definitely want to keep an eye on those peers, and then this bank as well, BMA right here. So see if this gap upholds. Probably want to watch this earnings at the end of the month for BMA if you get into YPF, but YPF earnings also important. Melly earnings are super soon though, so that's why this is definitely on radar, combined with that midterm just happening right now. This isn't the typical chart in terms of a chart just looking interesting. For example, like a AAOI, sort of an example of a similar channeling up chart that, choppy, but eventually breaking out, where you can just look at a chart and say, this thing definitely is strong. That is the case, that over a 5-year period, this is definitely strong, but it is important right now due to the two factors I just mentioned, the midterm election and earnings. So a little more info about basically what's going on in Argentina. GDP is projected to grow 5% and then 4% next year. So definitely business loves this midterm election. Bond market has rallied in the last couple years. That means other countries like their debt, they feel comfortable investing in their debt, which is a big deal. this is the stock index jumping 40%. And then this is the peso appreciating as well as compared to the dollar. So that's a good catch up sign. We'll see what he actually comes out with in terms of policies, but it's pretty clear just from that gap up that this is definitely a major positive for the market. There is some other factors, including lithium. So this is kind of what we're talking about. Melly is an e-commerce company, it's true, and fintech. However, they also are kind of an example of Argentina's strength as an emerging economy. And Argentina has 20% of the world's lithium reserves, which is a lot. Lithium is really important for batteries, for electric vehicle batteries, which is important for renewables, not just for cars. It's a very valuable commodity. The US is trying to become independent from China. We have Lithium America, which is a recent company that the US government took a stake in, LAC, following their stake in MP Materials. So lithium is definitely important, and the US is going to be friendly to Argentina, not just because of the lithium, but it definitely doesn't hurt. And there's also just the stock market as a whole is viewed more favorably. So JP Morgan is sort of saying that this market is getting upgraded. It's not, just an emerging market. It's a market that's worth investing in. And Melly has been talked about for over a year. We can see $1 billion coming into Argentine stocks is a big deal, and Melly is likely to be a major beneficiary of that. And then the IMS as well, the International Monetary Fund, approved a $2 billion package, basically, to back and stabilize the economy, encourage foreign direct investment, and that's certainly going to help the largest e-commerce company. So there are some other factors as well, trade related, but all we really have to know is that trading freely with Argentina is happening. This is the biggest company. This is the best company to invest in right now. We can see that from the chart on a 5-year channel forming here. And yeah, we can look at a couple other basically backbones of the Argentine economy, BMA and YPF. But in terms of immediate investment, this is the one that has earnings coming up. This is the smallest gap up. This is sort of a left side peak if you want to look at it technically, which does matter because just like every other company on the NASDAQ, a lot of people just use technicals and don't even look at what the company does. And then that midterm election was a big boom as well. So that's the idea, MELI, Melly. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to take advantage of earn $1,000 in stocks in the next 90 days or get your money back guarantee, try it out. Hit that join button, or head over to stockscommunity.com to join the Discord, where you get the best idea of the day and see if this guarantee is for you. It's not financial advice, but hope it helps.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump back into a little bit of Charlie.
Folks, this one stock might change early buyers' lives. In today's video, we're going to break down the latest on the market and plays. And then we're going to go on to this one stock that I believe has extreme potential. This is a company that I'd argue is set to get a ton of traction and coverage over the coming weeks and months because of its close connection to the president and his administration. This company sports a major government contract, is linked to the president's son directly, has a massive competitive moat around it, and has tons of potential upcoming catalysts that I've identified for you. I'm going to present my case for it as well as the risks to consider, and I'm going to let you be the judge. And of course, as always, if you're the one taking the ultimate risk, you've got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Remember, lots of people get frisky without thinking about their risky, and vice versa. Big problem. Okay, let's start with the market context. So the biggest theme we've seen play out this year again and again is disbelief, avoidance, and really utter hate for the stock market's uptrending this year. So many big major fund managers all across Wall Street absolutely are pissed that the stock market has returned as much as it has this year. If you recall back at the very beginning of this year, we were told by nearly all of the financial media outlets and financial experts and fund managers that 2025 was going to be the year of a major recession, a massive unprecedented market crash that won't recover for decades, and we were told that buying the dip in April would be the biggest mistake of our lifetimes. Now, of course, for folks who follow this channel, and really for any folks that weren't headline jockeys, well, obviously this has been an unprecedented successful year. In fact, there's hundreds and hundreds of companies, specifically in the AI space and the rare earth component segments, that have had double or triple or quadruples, many of which we called out here on this channel, and there's also many more outside of the scope of what we've covered. Now, that being said, just because things have gone up doesn't mean they're going to continue, and it's very, very important to make sure that you're buying good assets. And in my opinion, when it comes to outperformance in a market that's already up so much, it's very, very important to focus on three different segments. Companies directly serving the AI arms race, companies getting new US government contracts, /stakes, /backing, financing, so on and so forth, or companies that fall into both categories. Now, of course, we've been working hard all year to give you these ideas both here and on the Discord, and we're going to continue to do so, but today we got to start you with quantum. So last week it came out that the Trump administration was in talks to take stakes in quantum computing firms, and this is from the Wall Street Journal, and then those stocks, like our favorites and others, RGTI, QBTS, QUBT, IonQ, and others, subsequently rallied massively. And then the White House came out afterwards and denied being in talks to take an equity stake. However, once that news dropped, prices barely went down. Why? Well, I think it's because markets don't think that the White House is going to miss taking a stake in quantum. I think markets still believe there's going to be a partnership, stake in some form, and or other deals for quantum in the future, and they're trying to position accordingly. Trump has indeed already signed deals promoting investment into quantum, and considering that China is pouring public investment into the speculative next-gen computing space, well, many expect Trump to eventually do the same as well. Now, one of the things that a lot of folks don't understand about quantum is that quantum is very, very early stage technology. The use cases are limited. It's really just an AI arms race component. It's one of the battlefields, I should say, of the AI arms race. It's a sector that's going up because there's tons of investment, not because there's real world use cases today. Quantum stocks have been a hugely followed sector all year, and the top performers, QBTS and RGTI, we actually called out at very, very small fractions of the current trading prices because we believed, and we continue to believe very strongly, that while quantum is early stage and is far away from most regular use cases, it will continue to see investment because it is a front on the AI arms race. If you go back through my videos all year, you could find many companies, including RGTI, QBTS, QUBT, that many folks said can't go up because, oh, the technology is too early. But what I think a lot of people don't realize is that folks are buying the stock in anticipation of big government backing down the road. We've called out a lot of the government backing stocks before the government even officially announced them being backed. And I think you're eventually going to see specific quantum stocks be added to that list. And it's probably going to be during a cycle where nobody is even talking about quantum and quantum stocks are down so that the government can get a better deal in terms of entry price. There's a reason that you're seeing big banks like JP Morgan invest in this segment. There's a reason why more and more people are talking about quantum. And it's not because the use cases are here today, tomorrow, or next month. It's because they're expecting more investment down the road from other players. Buying quantum today might have been like buying next-gen GPUs 15 years ago. Now look, you're going to be hearing more and more about quantum this week because NVIDIA's GTC conference starts this week, and there's going to be a bunch of quantum presentations. And most importantly, you're going to want to pay attention to CCCX this week. Why? Because CCCX is the SPAC that is set to take Inflection public, and Inflection CEO Matthew Kinsella is speaking this week at NVIDIA's GTC. Tuesday, you're going to see a huge spotlight spotlight on inflection and, by extension, CCCX. But what exactly is inflection? Inflection builds quantum computers and sensors using neutral atom technology, which traps and controls atoms with lasers to perform quantum operations. Why does this matter in English, Charlie? Well, their tech can power quantum computing, navigation, and defense applications, from super precise clocks to next-gen AI simulations. Now, when you talk about proof of concept and their relationship with NVIDIA, not only does this company already make tens of millions of dollars worth of revenue, but Inflection works directly with NVIDIA's CUDA-Q platform using NVIDIA GPUs for hybrid quantum classical computing. Inflection aims for 1,000 logistical qubits by 2030, positioning itself as one of the top US quantum hardware players alongside IonQ, Rigetti, and PSI Quantum. So backing up, what exactly does CCCX have to do with anything? Well, CCCX is what's called a SPAC. A SPAC is a blank check company that goes and basically buys up, engulfs a private company, and effectively takes it public. Now, the way that SPACs tend to trade is what? Well, usually you get a lot of anticipatory running up and then right before the merger. Once it merges, you see a dumpito for a few weeks, and then the long-term value is revealed. But why exactly would somebody want to buy the SPAC, the CCCX? Well, when buying CCCX, the pre-merger entity, well, investors have optionality. If the quantum build-out goes well, upside could be multiple times the current market value. The market is still in the early innings for scalable quantum hardware plus sensing, and so extreme.
Okay. I'm all quantumed out. Let's jump into a little breakdown here on this JMIA, Amazon of Africa. So, got two LLMs, UEPS and SSL. HMY too, interesting. HMY, SSL, UEPA. I don't know if that one's a UEPS, payment processing. I don't know about these. This is so speculative. Some of these tickers are not even on the NASDAQ. SSL. Bonnie Stillwater is definitely a big one. Okay. Here we go. JMIA on a 1-year chart. Very interesting. Coming into earnings on November 12th. AU, Sabani Stillwater. Those are both gold miners. If you have any comments, questions, I can see those on YouTube. Any African companies for private equity funds. Okay. It's mainly mining companies. And then HMY setting up as well. Although, was setting up. Definitely got wrecked. Okay, here we go. Let's jump into JMIA. There's one stock that might change early buyers' lives. This is the Amazon of Africa, and a lot of African stock opportunities are gold mining related. They're South African, and with gold looking like it might take a bit of a pullback, a breather here, this Amazon of Africa e-commerce company could be the better pick. Now, if you're trying to invest in emerging markets, you may be familiar with the Argentine elections, the recent midterms that just elected Javier Milei again. And there's Amazon of Argentina, which is Mercado Libre, that recently benefited from those elections stock price wise and looks like it could break out to all-time highs. That's the Amazon of Argentina. They're also from Brazil. The Amazon of Africa, this ticker is JMIA. I'll jump into the chart right now and explain why this emerging market stock is so attractive, why I think it's attractive, and why investing in gold stocks might not be the move right now. This is the ticker, JMIA. It is the Amazon of Africa, and it's not concentrated in South Africa, which is unique for an emerging market play. Of course, it's listed on the NASDAQ. Very safe to invest in it that way. It's not a Chinese ADR either. It's not financial advice. Let's jump into the chart.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is the chart. So knowing nothing about this company, except to say it does have earnings coming up in November 12th, so a couple weeks away. This is pretty interesting, right? Well, I wasn't at all-time highs, but within the last few years, not counting the post-COVID euphoria, which a lot of companies experienced, it's pretty close to multi-year highs around 15. So did pull back a little bit, but right here, I mean, it had been up significantly since its first earnings, 150%. And it notably holding, so undercut this moving average and is holding up. So for people that don't look at what a company does, they don't even, I mean, if you're a fundamental value investor, that might sound crazy, but you can do pretty well, very well. Some of the best investors, the Renaissance market wizard proteges of the world, some of them just look at what a chart does, buy and sell, supply and demand wise. So pulled back to this moving average, undercut, and then held up. And now there's a little bit of a week or so before this earnings, where if you get a pop, and you do get in here, then there is some opportunity there. The volume is not big, right? We're talking about $20 million, $30 million a day. So you really don't want to put more than a couple $100K in any, 5 to 10 minute period at an absolute max. But still a lot of opportunity here. It's basically a penny stock, and as you can see, the moves it can make are absolutely insane. So this is the emerging market idea, JMIA. It does happen to be emerging market. And this is the Amazon of Africa. This is the Amazon of Argentina, with the recent gap up, as well as other Argentine stocks, YPF and BMA, experiencing big gap ups on increased volume, gapping up this bank stock on that election result in Argentina. So why JMIA? Well, volume's tapering off. It's sort of forming a flag. It's holding up really. I'm not going to draw something and just make something up, because that's pretty made up. But typically when something starts to base and then breaks down and then undercuts and holds a moving average, it means there's definitely buying support there. So that is the bull case. And of course, getting into these blue skies will be a next big step and important. And the reason why this is going sideways is there's some buyers here probably that, are selling as the stock gets back up to their levels. So still holding, just has to work its way through those bag holders. Now, these are some other companies that they're mainly South African. Sibanye Stillwater being the big one. But then this gold mining stock as well, Harmony holding up. And you can sort of see that Sibanye Stillwater has had a big run, and then this Harmony, this is sort of tracked gold, at least recently, sort of pulling back. Maybe not exactly at the same time, but pretty close with gold prices as well. Yeah, it's actually almost exactly, depending on how you look at it. But I'm mentioning these because what are you going to do if you're trying to invest in emerging markets? You're going to invest in this? Probably not. It's kind of catching a falling knife. You can invest in this, probably, maybe off of this left side peak, but pretty gappy, choppy, and not really a story stock right now. So I'm not saying you need to invest in, or anyone needs to invest in emerging markets for the casual investor who's trying to find the safest, lowest risk basket of stocks. But this one just so happens to also be an emerging market stock, besides the fact that its chart looks really attractive here holding up after getting to this basing level and getting near all-time, well, multi-year, which might as well be all-time considering 2021 is now 4 years ago, highs. So a little more about what we're talking about here. This is another ETF you can take a look at, EMQQ, but generally that's only if you need emerging markets exposure. This is an individual stock that you could just buy regardless of your portfolio needs. They are all the way up to Egypt. They have massive logistics arms, and they've also done electric bike deliveries in Uganda. So they're sort of working in the whole NGO green sector, you could say. They do have buy now, pay later, which you can imagine is pretty important for a fintech sort of Amazon e-commerce type company. And they're basically setting a new standard for what's possible. They're one of the few large companies that are not in South Africa, of African companies. They're headquartered in Nigeria, and they're in these big African markets, including Egypt, Kenya, as well, and Morocco. So Amazon is massive here. It's not big in Argentina yet. That's why there's Meli. And in Africa, that's why there's JMIA. Of course, in China, they have their own as well, PDD. Coincidentally, I don't think this is related, but PDD is also setting up right now over these levels. And the Chinese index, yin, same situation, pulling back and then showing strength. So not rolling over. So, if it is related, it's definitely a boom for e-commerce. And it's obviously a massive growth opportunity here if they can basically bridge the gap between Silicon Valley and the African market dynamics, whatever those may be. I certainly have no idea, but I do know that they're publicly listed, and they are pretty much the only way to invest. I mean, if you're investing in Alibaba, you're also not investing in a competitor at all because they're in China. Alibaba, coincidentally, also looking pretty good. Not coincidentally, because of course all these Chinese companies look pretty similar. Look at Baidu, look at Baba, even Futu, Tiger. They went up, they pulled back. They all follow this index. But JMAI, following that same chart theme pattern. So there are investors who are looking at all these e-commerce companies and not caring about where they are. So, I shouldn't say they're totally unrelated, but I do think this is a unique opportunity in terms of sort of dominance in one continent. It doesn't hurt that this Argentine midterm just went through, and this e-commerce company in Argentina just had a big bump up as well. So if you can get in with a little cushion here before earnings, that's great. If it just goes sideways, then you really don't want to be holding into earnings because, yeah, this was great, but that's not always the case, right? So this is speculative, but I also think it's a pretty great opportunity for growth. So if you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to try out a $1 course, hit that join button or head over to stockscommunity.com. No guarantees with the course, but for people who have a lot of time and, you know, just want to soak up information, that's there for you. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, let's see what else Charlie's got to say about this quantum.
Upside potential can be realized over the years. But also the SPAC has cash in trust and the merger proceeds give the combined entity capital to scale. So once CCCX merges with Inflection, taking it public, well, Inflection's going to have all this extra cash. And that's going to help it accelerate its trajectory. If one believes quantum eventually is going to become a foundational infrastructure theme, or like I do, simply believes there's going to be even more investment over the coming years because of all of the trends that we're seeing, well, that means that CCCX might very well have favorable leverage to that narrative. AKA, it's one of just a few players that is really, really embedded into the quantum ecosystem. So anyways, in totality with CCCX, it's a very high risk play, and it is a very high potential play. If you believe in the long-term quantum sensing AI infrastructure theme and you're comfortable with that elevated risk, early stage, SPAC, and execution dependent, well, CCCX does give you a very volatile but leveraged stake in the future there. A lot of people say, you know, Charlie, you shouldn't be talking about quantum stocks because they're very volatile, they're very early stage, and there's a lot of risk with them. Maybe you should talk about something safe like Home Depot or McDonald's. Remember, volatility and risk, those are the prices that we pay for outperformance. I like the McDouble and the Big Mac and the little Egg McMuffins as much as the next guy, but I'm not buying those expecting huge upside. Maybe in terms of the waistline, but not in terms of my portfolio. We've always been about presenting lopsided, asymmetrical, crazy upside potential and identifying the risks and being aware of those risks and strategizing to manage those risks. So anyways, that is something to consider there. Okay, main entree. So it just came out that a firm connected to the president's son just got a major Pentagon contract, and that's this company, UMAC, which is Unusual Machines Inc. Now, UMAC, UMAC, is a small U.S. drone company that is benefiting massively from new laws pushing American-made drones. As the government bans Chinese-made drones and parts, UMAC stands out as one of the few companies already producing U.S.-approved components like motors, controllers, and cameras, and it produces all of this at its new factory in Orlando, Florida. With its popular consumer brands and its official approval for government and defense use, UMAC is set up to become a key supplier as the U.S. builds out its own drone industry over the next few years. Now, I think it's very, very important that you understand the timeline of what's happened with this stock. So November 5th, 2024, President Trump gets reelected. November 27th, 2024, Donald Trump Jr. joins UMAC. Company publicly announces Donald Trump Jr. has joined as an advisor to the company and confirmed that he already owns shares. He explains the importance of onshoring drone production. Ending of 2024, The Guardian and Market Watch and some others published articles highlighting Trump Jr.'s involvement and the company's link to the U.S. military drone ecosystem. Public awareness of UMAC surges. June 4th, 2025, Unusual Machines signs a lease for a 17,000 square foot Orlando drone motor factory, substantially upping domestic onshoring. June 6th, 2025, Trump's U.S. executive order to accelerate U.S. drone production is signed. And then October 24th, 2025, Financial Times reports UMAC winning a
Okay, drones are interesting, speculative, maybe.
Here is a brutal truth.
I do think there's better opportunities. Right now, I could be wrong. I do think Neo is interesting, so did have that recent lawsuit, but seemed to be holding up. They misled investors by inflating revenue through their dealing with a battery company. They do have earnings not until mid-November. At an important level. %60 year-over-year increase in vehicle deliveries in September. That's pretty big. Okay. If you have any comments, questions, get those on YouTube. Otherwise, do a little breakdown. The NEO is about to explode. This company in September had 60% year-over-year increase in vehicle deliveries, just coming off of a lawsuit from a Singaporean wealth fund stating that they misled investors. Well, the stock price still seems to be holding up, and even after the market drop a couple Fridays ago on Trump's rare earth comments, Xi Jinping walked back, or clarified rather, that China wasn't trying to stop its companies or other companies from exporting rare earths, just wanted to approve them. NEO did fall on that day, but it's holding up and it's at a very favorable risk reward spot, particularly going into this couple week period where, unlike a lot of other companies, NEO earnings are not until early mid-November, closer to the middle of November. So there's some time to get in where you don't have to gamble, and that is a good thing. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is a little bit about NEO's competitors. Li Auto, LI, is NEO's closest competitor. Much more deliveries than NEO. Solid margins, which are better than NEO's. Operating profit. So they have extended range EVs. And then XPEV as well, another major competitor in China, which is also a ton of deliveries, almost 100,000 in Q1. A better margin, and they're getting into autonomous driving. BYD as well in the conversation. So just to look at those charts, however, starting with NEO, this chart looks great. Coming off this left side peak here, there's going to be very little supply. It's really just from the past couple weeks. And this is going to act as support, or it has acted as support. So people that bought here, when the price got down here, they didn't sell. So they still want to own the stock. So that's what this is showing. And yeah, there is a level to get over here. But before that, you really just have the COVID, the 2021 euphoria. So there's a lot of blue skies to get back up to those levels. And NEO's recovering. And like I said, earnings are not for almost a full month, a few weeks anyway, November 19th. So you do have an opportunity to buy before then. You don't want to be buying right before earnings because anything can happen. Here's an example. Q2 earnings, big wick down. This doesn't look like a lot, but this is $1.50 on a $6 stock. That's pretty rough. I mean, that's 20%. So yeah, bounce back, but still. So that's the chart. And then if just to look at these other companies I just mentioned, LI doesn't look like something you want to buy. XPEV better, for sure. I don't know that you want to buy it right now, but definitely curling up and in the conversation for sure. Typically you want to get in, when the days are compressed, when they're tight like this. Not after a big green day, but still, it's a positive for the sector as a whole. So here's NEO, here's the opportunity, and you can see those tight compressed days. To kind of give an example of, similar stocks, right? Tesla kind of offering that opportunity as well. I mean, kind of a big day here, but was down after earnings, kind of whipsawing and still at a low risk sort of shelf. So that's supply demand, what's going on there, supply demand wise. BYD is another one to take a look at, although because it's an OTC, it's not as interesting. It's also very illiquid, so it's almost not really worth talking about if we're being honest, even though the company itself is worth talking about. The stock is not. So BYD, a dominant, they're kind of known to be the name in China, but NIO is much more investable through NASDAQ. So people say, Tesla operates in China and competes directly with NIO. Yes, they're also just very different. Yes, Tesla's gross margin may have slipped, but the price of Tesla is very based on humanoids and self-driving coming, happening. Rivian also in that conversation as well, and Lucid, although Lucid is not something that, it was big in COVID, but we'll look at that ticker right now. Rivian, 40,000 deliveries in all of 2025, so not really comparable to some of these other numbers, almost 100,000 for XPEV in just one quarter. Of course, China market is massive, so that's not really apples to apples. But here's the Rivian ticker. It is sort of compressed. It's interesting, but it also just goes sideways. And then when you look at, drawing a blank right here. What was the name I was just talking about? Lucid. Sorry, they're very forgettable because look at the stock price. And yes, they had a massive moon, but so many companies had a massive moves up in 2020 and 2021. So NIO is definitely the darling of names that survived and continues to have huge investor bases rallying behind them. Now, this is the challenge that I did mention. Singapore's Sovereign Wealth Fund, they probably only have one. I mean, that would make sense, wouldn't it? They did announce they would sue NIO over their alleged fraudulent accounting practices, and NIO did drop on that. There was sort of some accounting, financial engineering, whatever it was that NIO did through its battery venture. And the wealth fund claimed that NIO recognized those earnings up front instead of recording them sort of as they happened. 7 years to pull forward of revenue is a lot. So NIO said this is it's not a new incident. It's not directed at NIO's operational performance. So the stock price has done okay despite that. So that's kind of what we have to concern ourselves with. This is a lot of vehicle deliveries, as I mentioned, 64% year-over-year increase. It's a new quarterly record. But as we've seen with Tesla, it's not always the case that these delivery numbers really spike the stock, and specifically on Tesla. If you are buying stocks based on delivery numbers, well, you're going to have a bad time because this was a sell the news event when those delivery numbers came out. Tesla had a big flag forming. I mean, this is the most beautiful thing of the year that's set up here and did break out. And at that point, it doesn't matter when delivery numbers come out or what they are. Well, it does matter when they come out because the whole point is the stock just went up 30%. So everyone who bought, unless the delivery numbers are absolutely exceptional, that's an opportunity to sell into that event. So it's good to not get euphoric and sort of recognize where you are in the cycle. And it does look like Tesla also is at a good spot because now it's digested for a full month or more than a month and gotten through earnings. So it's getting interesting again. But NIO also at a good spot because it's pulled back a little bit, had the shelf, which is at the same level after Q2 earnings. And also, as I mentioned, has a couple weeks before its next earnings, Q3 earnings. So as far as actual product updates, they do have some sort of entry-level brands that make up the bulk of their deliveries recently. So that's good. That's a massive segment. Tesla famously starting with the luxury vehicle and then moving down to the Model 3, the daily driver for tens of millions of Americans. And then NIO, 4,000 units delivered in a week for their main brand. And then those other brands, the sort of entry level, with even more units. So sort of following in Tesla's footsteps. I don't know if NIO investors like to hear that, but that's sort of how it reads. CEO said that fourth quarter profitability must happen. Everyone should get after it. Sure, employees love to hear that, but it is a positive focus on reaching break even. So this is, a growth story. So that is what it is. You're investing in a growth story, but it does have some buy ratings from analysts. Unsurprisingly, that's what analysts do. But it is bullish to hear that even after that lawsuit and whatever executives leave, and that leaving is somewhat near a lawsuit. That's always sort of a raised eyebrow moment. So we'll see what happens. Earnings are definitely going to be important. And I know people really are passionate about NIO. So it is important to highlight that there are some advantages that NIO has over Tesla, namely this battery swap technology. So basically swapping a depleted battery for a full one in 3 to 5 minutes is faster than any supercharger. And I think until you experience that, you're never going to understand how convenient that could be. So Tesla abandoned battery swapping years ago. NIO going for it. So see what happens. That's the idea. That's the level. If you like these ideas, hit that like button. If you want more, hit that subscribe button. And if you want to make $1,000 in stocks in the next 90 days or your money back, that is the stockscommunity.com guarantee. Head over to stockscommunity.com or hit that join button here on YouTube to get videos before they become public. So you'll get them very soon after they're recorded, which you can imagine is pretty important for stock ideas. This is not financial advice, but I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.